Hello friends, welcome back to my channel CA. Today we are going to learn how to file ITR2 with foreign assets and foreign income. So this is my updated video due to changes in budget and income tax processing. Last year many people got income tax notice through mail for declaration of their foreign assets and foreign income. और अगर आप भी अपनी foreign assets और foreign income को declare नहीं करते हैं तो start declaring your foreign assets and foreign income in your ITR ताकि आप फ्यूचर में होने वाली टेंशन और पेनल्टी से बच सकें. Now understand what is foreign assets and foreign income. Foreign assets mean any holding outside India like shares of foreign companies, securities, foreign bank account and properties in foreign. And foreign income means any income from outside India like dividend income, interest income, YouTube income, salary income, royalty income and consultancy fee. Now you might be wondering how the income tax department will find out about your foreign assets and foreign income. तो मैं आपको बता दूं, India has signed treaty with many countries under which all signed countries will share financial data of Indian resident with income tax department annually. Then income tax department just cross-check this financial data with your ITR to find out any non-disclosure. And this non-disclosure of foreign assets and foreign incomes comes under Black Money Act and which leads to penalty of rupees 10 lakh and imprisonment in some cases. Now you must have understood the importance of declaring foreign assets and foreign income in your ITR. Let's understand how to file ITR2 in such cases. For your better understanding, here I am taking example of Indian resident named Mr. A who has salary income, capital gain on Indian shares, foreign income as a dividend and also holds shares of foreign company. Before going to file ITR2 on income tax portal, we need to understand who required to file ITR2 and what document will be required for filing ITR2 with foreign assets and foreign income. So this is a list who can file ITR2 in simple language where ITR1 is not applicable or who don't have business and profession income can file ITR2. For example, a salaried person who don't have business but he do intraday trading or F&O trading, earning from that trading will be treated as business income. So he will have to file ITR3 instead of ITR2. And in ITR3, the declaration of foreign assets and foreign income will be same as I am going to show here in ITR2. This is the list of documents required for filing ITR2. Form 16, 26 AS, EIS, investment proofs and eligible deductions, capital gain and loss statement, statement of foreign income and tax at foreign country, and foreign assets information. The most important thing regarding foreign assets is we need to disclose all foreign assets which we have held or sold in last calendar year, whether that assets has been purchased in last calendar year or before. And the last, in ITR all values go in INR, so we will use telegraphic transfer buying rate to convert the value of foreign assets and foreign income into INR. Let's file ITR2. Log in to your income tax portal. And if you found this video helpful in your ITR filing, then show your appreciation by clicking on thanks button. And your support will help me to create content like this. First, log in to your income tax portal. Directly return filing window will open. If it is not open in your case, in the e-file head, in income tax return, click on file income tax return. Now select your assessment year 2025-26. Select mode of filing. We are filing online. So select online. Click on continue. Click on start new filing. Here we need to select our status. Individual will be auto selected. Just click on continue. Select ITR form. We are filing ITR2. Proceed with ITR2. Here one note will pop up that by default regime will be new tax regime. Let's get started. Here we need to provide filing reason. Here I am selecting first taxable income is more than exemption limit. Select appropriate option as per your applicability. Click on continue. Here schedules are divided in 5 categories. Some schedules are mandatory and some we need to select based on our requirement. So here I am selecting schedule based on our example where we have salary income, house property income, Indian short term and long term capital gain, foreign assets and foreign dividend income. Here in this video I am not going to cover foreign capital gain, but if you have foreign capital gain you can go through my next video on foreign capital gain which I am going to release very soon. Let's select schedules from all categories. In journal, part A is mandatory and auto selected. Don't click on continue until we select schedules from all category. Our next category is income. Schedule salary and house property are already selected. Here I am selecting capital gain. Schedule 112A for long term capital gain on equity. Schedule OS has already selected. Select Schedule SI for special rate for capital gain. And select Schedule FSI and TR for foreign source income and tax relief on that. You can also select schedule as per your requirement, like Schedule VDA for cryptocurrency, Schedule SPI for clubbing of income of spouse and minor, Schedule EI for exempt income like agriculture income. Next category is deduction. Here I am going to select Schedule 80D, Schedule 6A and Schedule 80C because we are filing return as per old tax regime. If you are filing return under new tax regime, then select Schedule 6A only for claiming NPS deduction. Here I am filing ITR with old tax regime, but simultaneously I am going to tell you what changes will come in new tax regime. Next category is tax. Here all schedules are already selected. If ESOP is not applicable to you, deselect it. Our next category is others. Here mandatory schedules are already selected. Here I am going to select Schedule FA for foreign assets. And Schedule AL you need to select when your income exceeds 1 CR. Now we have selected appropriate schedules as per our requirement. Now we can click on continue. Here if you click on continue, there will be some set of questions, but as per my suggestion, there is no point of answer them, just skip them. Here one note will pop up that ITR will be pre-filled on basis of your AIS and TIS. Click on OK. So these are the schedules which we have selected. So our first schedule is general information. Click on it. Cross-check your personal information and contact details. If you want to edit your contact detail, click on it and edit your contact detail. Now click on filing status. Filed ITR under section 139(1) because we are filing before the due date. Our next question is regarding regime. If you want to go with old tax regime, click on yes. If you want to go with new tax regime, click on no. Here I am going to select yes and will also tell you what changes will come in new tax regime. Our status will be resident. Condition 1, 182 days and more. Here are some set of questions. You need to answer them based on your applicability. For me, all are no. Next is bank detail. Click on it. In bank detail, you need to add one bank account and validate it. If you have multiple bank accounts, then one account you need to be nominate for income tax refund. Click on confirm. Here we can see our general information schedule has been confirmed. Now go to second schedule, schedule salary. Click on it. In salary schedule, data will be pre-filled on basis of your Form 16 and AIS. Now click on gross salary. Click on edit. Select nature of your employer. If you are a central government employee, select central government. If you are a pensioner, select pensioner. If you are an employee of private company, select others. Here I am selecting others. Here we can see our total salary will consider as a basic salary, but we need to provide breakup of our salary for claiming deduction of allowances. Here this is my dummy form 16. I am using the same example of my last video of form 67. So this salary is reflecting on ITR side in basic salary. But this is my salary breakup. In breakup, this is my basic salary. this is HRA, this is LTA, and all other allowances which are not eligible for exemption, I clubbed them all in other allowances. So our basic salary is 10 lakh. For providing breakup, click on add button. Next is HRA. So our HRA is 5 lakh. Click on add. For LTA, our LTA is 20,000. Click on add. For other allowances, so our other allowances are now we can cross check salary from form 16. So it is matching with form 16. Now we need to cross check our perquisites. So as per form 16, it is 3,90,000. And we also need to check with our breakup of perquisites. So under stock option, it is 3,90,000. So it is matching with our form 16. So we don't need to edit it. So our gross salary is this. Check with our form 16. So our gross salary is matching with our form 16. Click on save. If you want to claim deduction on allowances, click on it. In new regime, only few allowances are allowed. And this is a list of allowances which are allowed in new tax regime. You can go through it and check if you are eligible for any. Here I am claiming LTA and HRA as per old tax regime. First I am claiming LTA deduction. Click on edit. My LTA deduction as per form 16 is 20,000. Save. For claiming HRA deduction, we need to fill section 1013A. Click on it. Provide place of work. If you are in metro city, select metro. If you are in non-metro city, select non-metro. So here I am selecting non-metro. Here actual HRA is already populated as we already filled in salary breakup. And I have rent paid of 4,50,000 in financial year 24-25. Next is detail of salary. Here you need to fill your basic salary 10 lakh. Next is 50 or 40% of salary. If you are in metro city, please provide 50% of basic salary. And if you are in non-metro city, provide 40% of your salary. So I am in non-metro city and this is my basic salary. So 40% of basic salary will be 4 lakh. Now we can see eligible exemption under HRA will be automatically populate here. And it will automatically populate in section 1013A, 3,50,000. Next is deduction under section 16. In old regime, standard deduction will be 50,000 only. But in new tax regime, standard deduction will be 75,000. And it will be already filled as per your tax regime. Next is PT. So as per form 16, my PT is 2,400. It is allowed in old regime only. Now you can cross check your salary with your form 16. It is matching. Now click on confirm. Our next schedule is house property. Click on it. In new tax regime, home loan interest deduction is not allowed on self-occupied house property. So only fill this schedule if you have let out house property. But in old regime, you can claim home loan interest whether property is let out or self-occupied. Here in my case, I have let out house property. So I am filling details accordingly. Click on house property. Click on add button. Provide the address of your property. I am entering dummy address. Owner of property. Select appropriate option. Here I am selecting self. Next is property is owned by anyone. Here I am selecting no. Now type of house property. In case of self-occupied, select self-occupied. So in case of self-occupied, if you want to claim interest deduction, you have to fill section 24B, which I am going to show in let out house property case. So I am selecting let out. Next is tenant detail. Here you need to provide your tenant detail. Click on add button. Provide name of your tenant and PAN number of your tenant, Aadhaar number of your tenant if available. Here you need to provide your rent received in financial year 24-25. So it is 3 lakh in my case. The amount of rent which cannot be realized, so it is 0. Tax paid to local authorities, so I have paid 5,000 to municipality. For deduction of interest on home loan, you have to fill section 24B in self-occupied as well as in let out house property. Click on add. In last year, we can claim interest deduction by providing figure only, but from this year onwards, we need to provide complete details of our home loan. So select loan taken from. Here I am selecting bank. Provide bank name. So in my case, it is SBI. Provide loan account number. Here I am providing dummy account number. Provide date of sanction of home loan. Provide total amount of your home loan. It is 25 lakh. Loan outstanding balance as on 31st March 2025. It is 24 lakh. Interest on borrowed capital. Here you need to provide interest amount paid in financial year 24-25. So it is 2 lakh 1,000. If you have taken more than one home loan, you can click on add button and add details. So here we can see our interest amount is automatically populate here. So our net income from house property is 5,500. Now click on save. Click on confirm. Our next schedule is capital gain. Click on it. Click on OK. For short term capital gain, click on A1. For short term capital gain on equity shares or equity oriented mutual fund, click on second point. Click on add. Here you need to select 11A. Here we need to provide separate details for transaction before 23rd July 24 and after 23rd July 24. Because shares sold before 23rd July 24 will be taxed at the rate of 15% and shares sold after 23rd July 2024 will be taxed at the rate of 20%. So in my case, I have sold the shares after 23rd July 24. So I will fill details in this column only. So here we need to provide details as per our capital gain loss statement. So this is my capital gain loss statement for the financial year 24-25. So this is my short term capital gain. So here we need to provide full value of consideration, that is sell value. So in my case, sell value of equity is this. Next is cost of acquisition, that is purchase price. So in my case, it is this. Next is expenditure connection with transfer. So in my case, I have done expenditure of 200 rupees. So this is my total short term capital gain, which is matching with my capital gain statement. And in same way, you can fill detail if you have sold share before 23rd July 2024. Now click on save. Now click on long term capital gain. As per my example, I have long term capital gain on equity. So click on point number 4. Now click on edit. Click on view schedules 112A and click on add. First select shares or unit acquired. If you have purchased before 31st January 2018, select this. And if you have purchased after 31st January 2018, select this. Here I am going to show you one dummy entry for purchase before 31st January 2018. In case of purchase before 31st January 2018, You will have to do separate entry for each transaction. Here you need to select shares sold before 23rd July or after 23rd July. So before 23rd July, tax rate is 10% on long-term capital gain, and for after 23rd July, tax rate will be 12.5%. So here I am selecting before 23rd July. In my case, ISNI code is not available. Here you need to provide name of your shares, number of shares, sale price per share. Sale price per share is 230. Cost of acquisition is our purchase price. So here we need to provide total purchase price, that is 1000. Here we need to provide fair market value per share on 31st January 2018. So my fair market price is 150. If you have done any expenditure in connection with transfer, you can mention here. So in case of purchase before 31st January 2018, our cost of acquisition will be higher of actual purchase price or fair market value, whichever is higher. So here our cost of acquisition will be 1500, and we have claim expenditure of 15 rupees. So now our capital gain will be 785. In same way, you need to do entries for every transaction for share purchase before 31st January 2018. So in my case, I have purchased after 31st January 2018. So in case of purchase after 31st January 2018, we can do consolidated entry. We don't need to do separate entry for each transaction. Here you need to select shares sold before 23rd July or after 23rd July. You will have to do separate entry for both. In my case, it is before 23rd July. Next is full value of consideration. That means total sale value. In my long-term capital gain, my sale value is this. Cost of acquisition is purchase price. My total purchase price is 75,028. Here we can claim expenditure in connection with transfer. So in my case, expenditure are 401 rupees. So my long-term capital gain value are matching with this. Click on save. If you have one more entry for after 23rd July, you can click on add button and add the detail in same way. Now click on confirm. Click on save. Here we can see our short-term and long-term capital gain are reflecting. Now directly go to head F, information about accrual or receipt of capital gain. Click on it. Here we need to provide quarter-wise breakup of our net capital gain. But if you have any current year losses or brought forward losses, then first check your BFLA schedule and fill accordingly. In my case, there is no capital gain losses. So point number 1 is for short-term capital gain, where we have sold share before 23rd July and tax rate is 15%. So in my case, I have sold after 23rd July. So it will come under this category, point number 2. So in my case, it is 4,000 for second quarter, 10,000 for third quarter, 6,000 till March 15, and 0. And in same way, if you have long-term capital gain before 23rd July, you need to put here in point number 6, where tax rate is 10%. And if you have long-term capital gain sold after 23rd July, where tax rate is 12.5%, you need to mention in point number 7. So in my case, I have sold before 23rd July. So in first quarter, it is 50,000. And for second quarter, it is 65,848. This detail should be matched with respective column of BFLA. Now click on confirm. Now let's cross check with BFLA. Here our short term gain reflecting under 20% and long term gain reflecting under 10%. and this value should be matched with our total bifurcation, otherwise it will give error. Now back to summary. Our next schedule is 112A. We have already filled details in capital gain schedule. So details will automatically populate here. Just cross check and confirm. Our next schedule is other source income. Click on it. Here mostly data will be pre-filled on basis of our AIS. You can cross check and update if required. So first click on gross income. This is our Indian dividend. This is the interest income, and we want to add our foreign dividend. So click on edit button. In Indian dividend figure, we will add foreign dividend also. So our foreign dividend is $100, and in INR it is 8,368, which I already explained in my last video of Form 67. You can also go through my video Form 67 to understand this calculation. I have given link in description. Also, you can click on top right corner for watching that video. So our foreign dividend is 8,368, which we will add in our Indian dividend. So it will be 15,817. One note will pop up that you will have to provide quarterly wise bifurcation of this amount in table 10. In same way, if you have interest income from foreign, you can add in respective column. Click on save. Now go to table 10 for providing quarterly bifurcation. Click on it. So this is our total figure of dividend we received. We have to remove this and we have to provide quarter wise. So till 15 June, I have received 1800 Indian dividend. I have received 2000 Indian dividend in second quarter. In month of November, I have received full foreign dividend, that was in INR 8,368 rupees plus 2000 I have received Indian dividend. So full value will be 10,368. Till March 15, I have received 1200 Indian dividend, and in last I have received 449 as Indian dividend. Here total should be matched with your total dividend income. Click on confirm. Our next schedule is CYLA, set off of current year losses. In my case, there is no current year loss, and it will automatically set off if you have. So just go down and confirm this schedule. Our next schedule is BFLA, set off of brought forward losses of earlier years. Click on it. In my case, there is no earlier year losses. If you have earlier year losses, then it will set off automatically. Just cross check your details in BFLA and confirm. Our next schedule is CFL, losses carry forward to future years. The losses which has not set off in current year, that will carry forward to future years. In my case, I don't have any loss. If you have any loss, that will populate automatically. Just go down and confirm. Our next schedule is SI, special rate income. So income on which special rate tax is applicable, which reflect here. In my case, I have short term capital gain of 20,000, which have 20% tax rate, which reflecting here. And my long term capital gain is this, and which cover under special tax rate of 10%, but it will be non taxable because it is less than our basic exemption limit, which is 1.25 lakh. Just cross check your special rate income on which you have tax at special rate and click on confirm. Our next schedule is deduction schedule 80D. Click on it. 80D is for claiming health insurance deduction for self and family and medical expenditure for senior citizen, and it is only available in case of old regime. So in my case, person and his family is not a senior citizen. So here I am selecting no. Now click on add button for claiming deduction. Here we need to write name of insurance company from where we have taken the insurance. So it is LIC, and the dummy policy number is this. and medical insurance premium is 20,000. Click on save. If you have taken more than one insurance, you can click on add button and add the detail. So in my case, parents are senior citizen, and for claiming health insurance, click on add button. Provide the name of insurance company. Provide the policy number. Here I am providing dummy number. And provide insurance premium amount. So that is 46,000. Click on save. Cross check your details and click on confirm. Our next schedule is 6A, but here we need to first confirm all schedule related to deductions. So here I will have to confirm ATC schedule first, and if you have more deduction schedules, then confirm them first, and after confirming deduction schedules, go to schedule 6A and cross check all deductions details in that, as schedule 6A provides summary of all deductions. So here I am first clicking on our deduction schedules, ATC and claiming deduction. Click on add. So this is my ATC deductions. In PPF, my figure is this, PF is this, and LIC is this. So my first deduction is PPF. Amount of PPF is 1,20,000. Here we need to provide policy number or document identification number related to deduction. So in case of PPF, we need to provide UAN number or account number. So in my case, I will provide dummy number. In same way, I have claimed PF and LIC. And for PF, we need to provide account number, and for LIC, we need to provide policy number. Now click on confirm. After completing deduction schedules, we can go to schedule 6A. I have completed my deduction schedules, so I am going to schedule 6A now. Click on part B. Whatever deductions you have claimed, you can cross check here. But NPS and ATTTA you have to claim here because there is no separate schedule for them. For claiming deduction of NPS contribution by self, you have to claim here. Click on edit button. So in my case, self contribution is 50,000. Click on save. For claiming deduction of NPS by self contribution, you have to provide PRN number. So here I am providing dummy PRN number. And in new regime, you can claim only deduction of ATCCT2 NPS contribution through your employer. It will auto populate here. If it is not populating, click on edit button and update that. And just cross check your other deductions. Now click on part C and CA and D. Here you can claim deduction of ATTTA, that is deduction of interest on saving bank account. Click on edit. Here I am writing maximum amount of deduction available. So here I am writing 10,000. So my eligible amount is 2,500. So I will correct 2,500 and click on save. Now click on confirm. Our next schedule is schedule FSI, foreign source income. Click on details of foreign income. Click on add. In my case, person have foreign dividend income of $100, and in INR it is 8,368 rupees, which I have already added in other source schedule. So here we need to just declare that 8,368 is my foreign income. Here we need to provide country code from where you have received foreign income. So in my case, it is USA. Next is tax identification number. Here we need to provide TIN number of respective country. If TIN number is not available, then you can mention your passport number. Here I am mentioning dummy passport number. So our head of income was other source income. So dividend earned from outside India in INR, it is 8,368. This calculation I have already explained in my Form 67 video. You can go through that. Link available in description. It is 8,368. Tax paid outside India. Tax paid outside India is 2092. Tax payable on such income under normal provision in India. So tax payable under normal provision in India is 1,320. So our tax relief will be lower of both country taxes. Here we need to provide article number of DTAA. Our article number of DTAA with US for dividend is 10. Click on save. Confirm. Our next schedule is TR for claiming foreign tax credit. Click on it. This data will automatically populate here from schedule FSI. Here we need to provide section of DTAA agreement. So our section is 90. As we have DTAA agreement with US, here we need to answer if any tax paid outside India on which India has given you relief has been refunded by foreign country. If yes, then click on yes and provide the detail. So in my case it is no. Click on confirm. Our next schedule is schedule FA. Click on it. In schedule FA, we need to declare all foreign assets which we hold in previous calendar year, that is 2024. As we hold foreign equity shares, so we need to fill details in table A3. So click on it. Click on add. Before filing this, we need to understand FA calculation in Excel. Here I took example of Microsoft. Address of company is this, zip code is this, and next is nature of entity. It is a company listed on stock exchange. Here you need to check your entity is a company or LLP and it is listed on stock exchange or not. At the time of declaring foreign assets, we must keep in mind that whatever we hold in previous calendar year, we need to disclose all those in schedule FA whether that assets purchased in previous calendar year or earlier. And for foreign asset declaration, we need to follow calendar year. Now we are filing return for the financial year or you can say previous year 2024-25. So we will declare all foreign assets which we have hold and sold in calendar year 2024. Date of acquiring is date of purchase. In this case, 10 shares purchased or received on 13 October 2023 or 10 shares purchased on 24 April 2024. This is a purchase price per share. This is a max price per share in previous calendar year. This is a closing price per share at the end of previous calendar year. Now we calculate total value of investment. Initial value is the buying value. So initial value of investment would be number of shares multiplied by purchase price per share. And peak value of investment would be number of shares multiplied by max price per share. And closing value of investment would be number of shares multiplied by closing price per share. And the next is gross amount credited with respect to the holding. In this case, we have received dividend of $100 on total 20 shares. So dividend per share would be $5. So it will be 50-50 for the both entries. And the last is gross proceed from the sale. If you have sold the shares, you can mention sale value here. My table 1 values are in dollar, but in ITR all values go in INR. And for that conversion, we will use telegraphic transfer buying rate of SBI. Now we understand conversion rule. First, for investment like purchase price, max price and closing price, we will use conversion rate of same day. For income like dividend income and interest income, we will use conversion rate of last day of immediate preceding month in which income has been received. For example, if we have received dividend in month of November, we will use conversion rate of 31st October. These are the telegraphic transfer buying rate of different date which I am going to use here. For the first entry, initial value in INR would be initial value in dollar multiplied by conversion rate of same day, that is 82.84. Next is peak value in INR would be peak value in dollar multiplied by conversion rate of same day, that is 83.06. Now the closing value in INR would be closing value in dollar multiplied by conversion rate of same day, that is 85.20. Next is dividend. Dividend in INR would be dividend in dollar multiplied by conversion rate of last day of immediate preceding month, that is 83.68, and there is no sell proceed. And in same way we convert the remaining dollar values in INR. Now we go back to schedule FA and fill the details. Here you need to provide country name where you are holding your foreign assets. Provide name of your entity. Provide address of your entity. Provide zip code of your entity. Next is nature of entity. It is a company listed on stock exchange. Date of acquiring is date of purchase. So it is 13 October 2023. Initial value of investment in INR. Initial value of investment is this. Peak value of investment is this. Closing value of investment is this. The gross amount paid or credited with respect to holding during the period. The gross amount paid is this. Total gross proceed from the sale of investment during the period. If you have sold your shares, then mention gross sell value here. So in my case, person haven't sold anything, so it will be 0. Click on save. In same manner, I am doing the second entry. Click on add. Here you can see I have done the both entries and I have done second entry in same manner. As we are holding foreign equity shares in foreign broker account, so that account need to be declared in table A2. Click on add. Provide country name. So in my case it is USA. Provide name of your financial institute. So in my case it is Morgan Stanley. Provide address of your broker account. So in my case is this. Provide zip code of your broker account. Provide broker account number. So here I am providing dummy broker account number. You can find all these details in your 1042S. Now next is status. So select your status as a beneficial owner. Provide broker account opening date. Here you need to provide peak balance of your broker account during calendar year 2024. So in my case it is. Here you need to provide closing balance of your broker account as on 31st December 2024. So in my case it is. And for converting peak balance and closing balance in INR, I have used TT buying rate of same day. Next is gross amount credited to account during the year. So here first we need to provide nature of amount. So in my case in broker account, I have received dividend and dividend value is 8368. Click on save. Here you can see our broker account details are reflecting here. Now click on confirm. Our next schedule is AMT. Click on it. Here figure will come automatically. You just need to confirm. Click on confirm. Next schedule is AMTC. Click on it. Here also figure will populate automatically. You just need to confirm the detail. Click on confirm. Our next schedule is TI, is total income. Click on it. In schedule total income, you just need to check your income figures and confirm it. Our next schedule is tax paid. Click on it. In schedule tax paid, your data will be pre-filled on basis of your AIS and 26 AS. Here you can cross-check your TDS details and TCS details and advanced tax and self-assessment tax. If you want to update any TDS, click on it, select that and click on edit and update the detail. Now click on confirm. Our next schedule is TTI, tax liability on total income. Click on it. Here you can see gross tax liability, tax relief on foreign tax. This is our net tax liability. Check interest payable if applicable. So this is total tax paid. And in last, net tax liability or refund will reflect here. So in my case, there is refund. Here we need to answer that at any time during previous year, if we hold any broker account, any assets, any bank account and any income from outside India, then we need to answer it yes. And we need to ensure that FA schedule should be filled. Here we already filled our FA schedule. Now click on confirm. Click on proceed to verification. Verify your details and click on proceed to validation. Validation successful. Click on preview. Preview your returns by clicking on all schedules. Click on proceed to validation. Validation successful. Now click on proceed to verification and verify your ITR by Aadhaar OTP and submit your return. That's how you can file your ITR2 with foreign assets and foreign income. If you found this video helpful, then click on like button and don't forget to subscribe my channel, because in my next video I am going to tell you how to report capital gain on foreign shares with latest update from the budget. Drop your queries in comment section. Thanks for watching my video.